live? Hey, this is Paul Moore. Welcome everyone to Investing in Self-Storage Facilities. This is Paul Moore, BiggerPockets, and so glad you're all here. We're going to wait for a few more people to get here. Welcome everybody. This is Paul Moore, BiggerPockets Live, YouTube Live, Facebook Live. Welcome to the show today. Glad you're joining us. We are excited to talk about self-storage. So thank you for joining us on a Saturday. Hey, it would be great if you could just let us know where you're from. So if you're here, give us a like, a comment. Hope you'll share this. Brandon Turner got 90 shares the other day, and it's my goal to get 91. So I know it's a Saturday, but we are so glad you joined today. So please share this, invite somebody else, add a comment, tell us where you're from. Glad you're here. Give us a heart. Hey, Charles, thanks for joining us. Where are you from? Hey, Karen, glad you're here. Sung Young Lee, hello, how are you? Glad to see you. So I'm operating 3 screens here. I've got Facebook Live, YouTube Live, and BiggerPockets Live streaming. So I'll be doing my best to watch all the screens here. Hey, everybody. Hey, Maya. Nice to meet you. Dornio, great to meet you from Ghana. Wow, great to see you. Thank you so much for coming. What time is it in Ghana? Carl, welcome. Victor. Hey, everybody. Midland, Texas. I actually have a petroleum engineering degree, believe it or not. So I expected at some point in my life I would have been in Midland, but I never was. So I ended up getting an MBA and not going to Midland, Texas. So, hey, Maurice. I had a lot of friends that went there, though. Baltimore, Maryland. Hey, Maurice. Great to see you. All right. So I am not seeing any comments on BiggerPockets here or on, and I don't have YouTube pulled up at the moment for some reason. It looks like it went away. Where is YouTube? Here we go. All right. So, wow, a lot of people here on YouTube. Good to see you. Hey, Art. Hey, Luke. How's it going? Vegan Fit. Hey. We should talk. Jersey Gunner. Hey, Andy. Is anybody having a video issue? Someone said they have a black screen. Looks like we're okay here. Preston from Hickory, North Carolina. Hey, how are you? North Dakota. Good to see you, Luke. Like a Boss from Goshen, Ohio. Hey, Vincent. All right. So thank you so much for joining. Hey, I'd love to hear what you think of having a BP Live on Saturday. I don't think we've ever done that before, so we'd love to hear your feedback. I know different people work during different days of the week, and it is Saturday, so for those of you here live, would love to hear. I think Zach Gwynn at BiggerPockets would love to hear what you think of having a Saturday show versus other days of the week. And if you have another day or two of the week you strongly prefer, we'd love to hear that too. So thanks again for joining. We're waiting a few more minutes till a few more people join. We're here talking about self-storage today, and it's an appropriate week to talk about self-storage because our guest on the BiggerPockets podcast this week, AJ Osborne, talked about how he spent grew his portfolio of $13 million of self-storage while he was in a coma. So if you haven't heard the BiggerPockets podcast this week, it is awesome. Highly recommend it. Check it out. Okay, Andy, glad to see your camera's working, your video's working now. Scott, hello from Nebraska. Hey, Preston, someone said Saturday's great. Saturday morning's a great time. Hey, Mr. Tugnup from Regina, Saskatchewan. So we have at least 3 countries. And somebody else, Mike from Alberta. So I'd love to hear during the course of the show what the self-storage climate is like in Canada and in Ghana as well. I know that self-storage is unfamiliar to my Chinese investor friends, so I'd love to hear a little more about what self-storage is like in some of the different countries that are represented here today. So, hey, John, that's great. You like Saturday Live? Me too. Hey, Linda, Saturdays are helpful. Kelly, good. Hey, Chris Carpenter from Boston, good to see you. Kelly, Dale, yeah, so we're really excited to have all you on today. Hey, Michael from Texas, John, Mike Drones, good to see you. So we're just going to wait another more minute here, and we're going to get started. I'd love to hear a little more about you. And in a moment, we're going to throw the doors wide open. In fact, let me just tell you a little story to get started here. You know, I don't really love locker room humor, but this is one I actually like. So, several men are in a locker room of a golf club. A cell phone on a bench rings, and a man engages the hands-free speaker function and begins to talk. Everyone else in the room stops to listen. The man, I hope I can imitate this well. Man, hello? Woman, hey honey, it's me. Are you at the club? Man, yes. Woman, I'm at the mall now and I found this beautiful leather coat. It's only $1,000. Is it okay if I buy it? That much. I also stopped by the Mercedes dealer and saw the new 2018 models. I saw one I really liked. Well, how much? $85,000. Okay, but for that price, I want all the options. Great. And, one more thing. The house we wanted last year is back on the market. They're asking $950,000. Well, then go ahead and make an offer, but just offer $900,000. They'll probably take it. Woman. Okay, see you later. Love you. Bye, love you too. And hang up. The other men in the room. Like astonishment. Then he smiles and asks, whose phone this is? Pachoom. Okay, so it's really important to know who you're talking with. And so I want to find out a little bit more as we get started here. Who am I talking with today? A lot of you have logged on and said hello. Gary from Port St. Lucie, Kelly, Alan, Thousand Oaks, California, Elena from Minneapolis. I want to know just a little bit more about what you do in real estate now and why you jumped on here today. I won't be able to answer everyone, but would love to hear just a little bit more about what you're doing in real estate now, what your plans are. Just give me a one soundbite answer. Love to know more. It's important to know who you're talking to. So go ahead and put that in the comment bar. By the way, if you haven't liked this, if you haven't given it a heart, if you haven't shared it yet, please do that. We'd love to have you share this episode. And by the way, if you're not a member of BiggerPockets BiggerPockets Pro, it is the best investment I've ever made. I can say that honestly. Ben Colley, my wonderful, amazing operations manager, talked me into going with BiggerPockets Pro membership a number of years ago, and like I said, it was the best investment I have ever made. There's so many reasons. Highly recommend that you get on BiggerPockets Pro if you have not. And also would ask if you subscribe through YouTube, if you're watching through YouTube, Facebook, or BiggerPockets today, if you would subscribe to the live stream, that would be fantastic. So, storage units in California are full from all the fires. You must be in Northern California. My daughter lives in Redding, California, and goes to school there, so I've seen a lot of fires there. Looks like someone's having a YouTube issue with latency. I don't know how to answer that. Hopefully that gets fixed for you, Luke. You're just researching the process. Some random guy who, okay, got it. That's good. Hey, Debbie, how are you? You want to generate retirement funds through short-term rentals? That's great. Someone else is wholesaling. Someone else is looking at long-term rentals. VRBO, developer from time to time. I'm actually going to do a future episode on how to use Airbnb and corporate long-term rentals to increase your profits from your apartment. And that's going to be fun. So Andre, you're starting to wholesale property, then fix and flip. Hey, Andy, buy and hold goals, then wholesaling and flips to get there. Excellent. Someone else says they were divorce debt was paid off and they're pulling money together for their first deal. That's great, John. All right. Fantastic. Well, we're going to get started. So you might wonder, why is a guy who wrote a book called The Perfect Investment about multifamily real estate, why is he talking about self-storage? And so Zach from BiggerPockets asked me to talk about self-storage today because he was aware that I was raising about $3 million for a self-storage deal right now. And so we're in the midst of that. We just finished that up, actually. But self-storage is becoming a bigger and bigger asset class. And one of the reasons is the crazy chase after multifamily. The last 5 or 6 years have made it really, really hard to get into multifamily and other asset classes. Like I said, I did write a book called The Perfect Investment, but honestly, the perfect investment becomes imperfect if you can't find any deals that make sense. And that's the problem. That's where we're at right now. It's very hard to find multifamily deals that make sense. And so we're at a situation. You might ask yourself, somebody asked me, why would anybody be buying multifamily right now? Why would anybody be buying multifamily if it's all overpriced? Well, there's obviously exceptions, and there are obviously people who are buying multifamily. But I'll tell you, I think there are about 5 reasons why people might be buying multifamily when they shouldn't. And I don't want you to be one of those. So there are actually a lot of reasons why people would buy when they shouldn't. But I think there are 5 reasons people are buying right now, and they may not be in the same situation as you. So number 1, a lot of them have foreign investment capital. I've got a friend, like I mentioned, from China who has a lot of capital he is deploying in the U.S. Some of his investors have said that they, just to get into the U.S. dollar and get out of their current currency, they would be willing to tolerate a 0 or very low return. How can I compete with that as a multifamily syndicator? By the way, we still are doing multifamily. My company is actively looking for multifamily, but we're not finding deals that make sense right now. Secondly, here's 1031 exchange money. There's money that's being transferred out of other assets in a tax-deferred manner through a 1031 exchange. And that money is coming in. And in some cases, not all, some cases people are so certain that they don't want to pay the tax that they are willing to tolerate a little bit lower return. They might be a little more lax on underwriting. A third reason is similar. Self-directed IRA funds. Self-directed IRAs are more popular than ever before in America. And a lot of people have self-directed IRA funds that they want to invest. And while they should have the same underwriting standards, some of them, let's say, are a little bit more lax in underwriting, and they treat those funds just a little bit different than they do other funds. So that's a number of reasons. The 2 other reasons I kind of hesitate to say, I'm not bashing anybody, but I will say that the rush into multifamily has caused a lot of new mentoring, a lot of new gurus to rise up, a lot of training, and a whole lot of people to jump into the market. And if you're new in multifamily, that's fine. But here's what's not fine. If you have access to capital and you are willing to do a deal that is not best for your investors, but you're doing it anyway, just to get a deal done. You want to get the fees, you want to charge the admin fee, you want a piece of the deal, and maybe the deal is not best. I'm just going to tell you that the people who are doing that are going to have to look themselves into the eye, in the eye for the next 10 years. They're going to have to look their family in the eye. They're going to have to look their investors in the eye, and they're going to have to explain, why this deal really didn't work. The key is, don't invest for appreciation only. We found out in the last recession that didn't work out so well for a lot of people. Invest for solid cash flow, or at least have a plan where you can get to solid cash flow. Brandon Turner talked this week on the Bigger Pockets podcast with AJ Osborne, why it wasn't so important to have a cap rate that worked up front, but why it was important to get to a place where you know that investing, you know that you can create the right cap rate through your operations. So those are some reasons people are investing in multifamily right now. And a lot of people are in a situation where a lot of other people like you guys who are on Bigger Pockets and getting training here are realizing that it's really overpriced. So today I want to talk about why a lot of multifamily and other investors are getting in to self-storage. Now, AJ Osborne talked this week on the Bigger Pockets podcast. I highly recommend you go there after this and check it out if you hadn't. He talked about his $13 million portfolio of self-storage units. He talked about how he was in a coma in the last year and he was able to maintain and actually grow his portfolio while he was in a coma. And so I'd like to ask if everybody would just chime in. If you were in a coma, would you keep making money? Would your business keep growing? Do you have a business that would keep making money or growing if you were in a coma? Please let us know here in the comment section here. Good to see you, Joey. Hey, Joey, investing for cash flow. That's awesome. Hey, Mark, Kelly, Brandon is the best landlord I'd ever rented from. That's nice. It's great to be a good landlord. Nick in Austin, awesome. Thank you for joining us. But we want to talk today about why people might be investing in self-storage. And then we'll talk a little bit more about how you can get into self-storage as well. So self-storage, actually, when we decided to expand our portfolio into self-storage, we were looking for an asset class that was similar to multifamily, something that did well during the downturn, something that did well when things were going well in the economy. Self-storage did that. Think about it. During the last downturn, a lot of people left their 4,000 square foot homes. They downsized into a smaller home or to an apartment. They needed a place to store their stuff. And so self-storage, after a quick downturn around 2008, actually did very, very well. And it actually sort of mirrored apartments and mobile home parks during the recession. They all did very well. So first of all, self-storage did well during a recession. Now, what happens during good times? Self-storage does well. As long as Walmart is selling stuff, as long as people are buying stuff on eBay and Amazon, self-storage is something that is needed. One thing that's great about self-storage is that people don't think they're going to be there all that long. Now think about it. If you were a landlord with an apartment and you raised the rent 6%, maybe you have $1,000 rent, you put it up to $1,060, 6% increase. You might have people who know they're going to be in an apartment for many years to come. They may leave. Well, if they leave, if they leave, you lose that tenant, your occupancy goes down. Think about self-storage though. If you raise the rent 6% on a $100 self-storage unit, chances are the guy is not going to go down, spend a Saturday, rent a U-Haul, move all his stuff down the street just to save $6 a month. Of course, there's a limit to that thinking, but self-storage has price elasticity because people are willing to tolerate rental increases a little more than they are in some other asset classes. And especially when you think about the fact that most people don't think they're going to be there very long anyway. Most people in self-storage think, hey, I'm only going to be here another 2 or 3 months till I get my week of vacation, and then I'm going to go out and clean the unit out, or I'm going to sell that stuff on eBay, or I'm going to haul it off to the dump. Statistics say, however, that they're going to be there a lot longer than they plan to be when they move in. So self-storage is price elastic. Self-storage has an attitude from the tenants that they're not going to be there as long as they are, and they're willing to tolerate rent increases more than the hassle of moving down the street. Another thing that we love about self-storage is if you have an apartment complex that has all, let's say, 2-bedroom townhomes, like an apartment that our company owns in Lexington, Kentucky. They're all 2-bedroom townhomes. We love it. Our tenants love it. But if there is a big trend towards 1-bedroom apartments, we're not going to be able to reconfigure those easily. In fact, we're not going to be able to at all. Or if there's a trend toward 4-bedroom townhomes instead of 2, it would be possible to reconfigure, but it'd be almost impossible. Self-storage is very easy to reconfigure. We're talking about sheet metal. We're talking about rivets. A great operator is going to be very cognizant of where the occupancy levels are for each size self-storage unit, and they're going to be able to reconfigure to meet the demand. Which brings me to another point about self-storage. Self-storage is actually fairly easy. It's fairly easy to run a mediocre self-storage business. A lot of people who got into it in the 80s or 90s, they're making a decent profit. They're okay. They might be a cash investor, and they're doing just fine. But it's actually very complex and difficult to run a fantastic self-storage business, a business that thoroughly and analyzes where the supply, where the demand is, not only of their facility, but of the others in the market. So to run a great self-storage business is a lot different and a lot harder than running an okay one that performs okay. And you can kind of think through that, how that could be. I mean, there's a lockbox model, which I have no problem with at all. You can get those electronic dynamic codes that allow people to log in, go themselves. You don't even need an employee on site. You might have a regional manager over 5 different self-storage facilities. That could be a profitable model. But there's another model where you have highly trained staff. You do a lot of marketing. You might have 2 people on site for the same size facility that had 0 under the lockbox model. And you do a lot of marketing. You do a lot of outreach to the community. That gives you opportunities to get tenants and to raise rents and do all kinds of things you couldn't with the lockbox model. And that's what I'm talking about as far as being a great operator. So there's an opportunity here that we don't currently have in multifamily. And again, I really regret that because I love multifamily. But here's the opportunity. There are about 53,000 self-storage facilities in the U.S. That's about the same as all the Subways, McDonald's, and Starbucks combined. Well, about 76 to 80% of those are run by independent operators or mom and pops. Okay, that means it's a very fragmented industry. Unlike multifamily, where almost every multifamily syndicator is being closed out right now because of the intense competition looking for deals, there's a lot more self-storage facilities available. There's a lot more that are operated at a fairly low level. A.J. Osborne talked this week about how it's not that difficult to find an off-market deal and be able to project what his income level will be in a self-storage facility versus where it is now. And if that income can be dramatically improved, it's great for investors because it increases their cash flow and, of course, it increases the value of the facility. Here's a quick example. A great operator can go into a mom and pop facility and they can actually add U-Haul, which increases the income perhaps $2,000 to $3,000 a month. How much effort does that take? Very little. They can add point of sale items. They can add, more boxes, tape, scissors, locks they sell. They sell insurance. They add admin fees, late fees, etc. And so there are a lot of ways just through policy and procedure changes without adding any capital expenses that a great operator can dramatically increase the income at a self-storage facility. So I'm going to take a quick second to see who else is joining us. Hey, Nick, do you recommend owner operating or hiring that out? Well, there are some companies out there, I know of 2 or 3, that are actually property management firms for self-storage. And I'd recommend that if you own a self-storage facility, if you buy one, you would hire out a property manager, depending on the size, depending on the location and situation. And so, yes, there are companies that will manage property for you. You could do it yourself, but it could be a little more difficult than you think, especially when you're getting started. Doug says, Paul, what a developer who incorporates a storage facility into a multifamily complex. Yeah, if the demand is right in your multifamily complex, you can add in self-storage. Let's say you have some extra land. It's not right for you to add apartments. You can add storage there. Here's a little metric that is used in the industry. This goes across a lot of different demographics and a lot of different geographies in the U.S. Look for markets that look for a metric of 7 square feet per person in a 3 and a 5 mile radius. Here's what I mean. Look at all the self-storage facilities, look at the size, and then see how many people are in a 3 mile ring, and then divide that out, and you're looking for locations that have less than 7 square feet per person in that 3 mile ring or in a 5 mile ring. A 1 mile ring doesn't help as much. You can do that as well. But if you find locations that have less than 7 square feet, and especially if they're locations like Florida, where there's a lot of recreation, there's a lot more wealth, they don't have basements, they don't use attics because it's too hot to store their stuff. That could be an opportunity for you to add self-storage. And the great thing about adding self-storage is you could add self-storage to a multifamily facility incrementally. You could go in and add just a little bank of self-storage and then see if it leases up among your own tenants and then the community. And then you could add a little more if that works, and a little more. It's not that expensive to develop if you have the land already. And that's one of the things we love about self-storage. Going in and finding an existing facility and increasing the income, increasing operations, and making that into a great facility is a great way to go, because again, there are so many out there that are not incredibly well run. And a strategy, by the way, is to put together a lot of these mom and pops, increase the operations, increase the income, refinance, and then hold them long term. Pull your money, pull your investment capital back out, and then hold those long term. And you will have an opportunity to reinvest that capital, increase your assets, and just continue to clip coupons, as they say. Another strategy is to put these all together once they're running tip top and sell them off to a REIT. Now, a REIT is generally going to be looking for larger facilities. The average facility size in the U.S. is about 50,000 square feet. REITs are not going to be looking for 10 or 20 or 30,000 square foot facilities. They're probably going to be looking for 50 to 100,000 square foot facilities who are already running really stably and really well. So I see a lot of questions are coming in, and I want to answer all those. I'm going to get back to my presentation. I will answer every question that I see before we're done here. Excuse me. So there are, like I said, there are significant ancillary income opportunities for self-storage. And a lot of times, AJ Osborne mentioned this week, he'll go in and he'll find out, he'll say, how are you marketing this? And a typical self-storage operator will say, well, I'm just waiting for people to walk in. And that is 50% of tenants of self-storage say they just walked in, they just drove by, which, by the way, makes it very important to have a great location for the facility that you're going to invest in. You not only want to be on a well-traveled road in a normal market, over 20,000 vehicles per day passing by, but you want to be visible to those 20,000 plus vehicles. So that's very important. No matter how much internet marketing you do, no matter how much other marketing you do, and by the way, only about 15% of self-storage clients come through an online basis. So is that indicative of the industry? Is it always going to be that way? Or is it an opportunity for improvement? I think it's an opportunity because a super well-run operator might be able to get an online presence that offers coupons, offers discounts, offers opportunities to get people in. Another way to get people in the door is I mentioned having U-Haul. Just having U-Haul is an opportunity in itself because it allows an increase in occupancy of 3 to 5% because people come to rent a U-Haul. A well-trained salesperson is going to offer them space in the facility as well, and of course vice versa. I do know one operator that gives free U-Hauls to anybody who will move into their self-storage facility. So that's another interesting strategy. Low-cost value adds is another excellent reason people are doing well with self-storage. Flexible lease terms and an easy eviction process. I mentioned earlier that you can raise your rent. I know an operator that raises rent strategically 6% twice per year. Now, of course, there's a limit to that because they can only do, so much above the rest of the market. And they raise the rent in August and December. Can you imagine why? It's because in August, a whole lot of people don't want to go out, especially in southern states like Florida, and grab all their stuff and move it down the road. In December, it's around the holidays, and they don't really feel like they have the time. In fact, they're going to be putting more stuff, more gifts and re-gifts and all that into the storage facility come the end of December. So there are a lot of great benefits, and we started this for those who are just joining us. I see people are still joining. There are a lot of benefits to self-storage, and there's a lot of reasons that people who love multifamily, like my company, Wellings Capital, loves multifamily, who are investing in self-storage. So I want to talk briefly about how to get into self-storage now. So one way, there are about 7 or 8 books out there on self-storage. I can't recommend or not recommend any of those, but I can tell you that there are some books, and we're hoping that BiggerPockets will eventually publish a book on self-storage. Another way is to find a mentor, and we've talked a lot in multifamily about finding a mentor. Finding a mentor in self-storage, there's at least 1 or 2 training companies out there, and one of those guys is deeply involved in BiggerPockets. You can find them. I have no affiliation with them, but you can go out and track down a coach, a mentor. The one I'm thinking of has training programs a few times a year, and so you can check that out. Another way is just to partner up with somebody else who's in the business. Now, like I said, it's very fragmented. What if you found a small-time operator, a mom-and-pop type operator, and went to them and said, look, I'm in my 20s. I see you have these 3 facilities you built in the 80s, and you're clipping coupons from them. What if I could come in and dramatically raise the income, and you give me a piece of ownership in that facility? And then maybe you structure a buyout with them where it's very clearly structured up front because you're on BiggerPockets, and if you're a pro member in particular, I know you're going to crush it. And so you will have the resources, you'll have the drive to go in and increase it a lot, and make sure everything's in writing, and go to them and figure out a structure where you can eventually buy them out or buy out part of their facility. A lot of these operators are older and they're ready to get out in the next 10 years. A lot of their kids don't want to take over. So that is another way to do it. I'm going to take a quick break and read some of these questions. So, Than, I'm sorry, I don't know how to pronounce your name. Will you be explaining how to finance a self-storage setup? I have a friend who is a Freddie Mac Fannie Mae lender, and he does loans very similar to multifamily, non-recourse loans on self-storage facilities as well. So that is an option. There's also a Freddie Mac and Fannie Mae small balance loan program, and there's a company out there called Sable. I think they're based in Ohio, and I think that they would also do self-storage loans. You could also, if it's a small or local, my son is buying timberland, and he's actually financing that through a small local bank here in Central Virginia. I know a lot of local banks will have more flexibility, and they'll do things that others won't do. So George, you asked the same thing. Yeah, financing, again, I think it'll be very similar to multifamily. Doug, what about a developer? I already answered that. This is cutthroat. Yeah, someone said that the company that raises the rents twice a year is cutthroat. Their investors appreciate it, though, I'll tell you that. I would love to have a storage place where I live. I know I'd sign up. Thanks, Kelly. I own some single. Mark Roberts says, hey, Mark, you said I own some single family here in Florida. I'm thinking about adding self-storage to the portfolio via purchase of an existing property. Great. So, Robert, thanks, Robert. You asked if it's better to build new or do an existing facility upgrade. Depends on your risk tolerance. I know an operator who went into a market in Naples, Florida, where there were no other self-storage facilities in a 3-mile radius. And they actually built from the ground up, spent $10 million total, and they sold that 2 years later for $20 million. So it sounds like they doubled their money, right? Nope. You BiggerPockets members know that they did not double their money. I think it was closer to 4 or 5x because they used leverage. It probably only cost them $4 million in out-of-pocket money to build that $10 million facility. So they probably, I'm just guessing, had a $6 million loan. And so when they paid that down, they probably didn't pay it down much. It was probably an interest-only bridge loan. So it's probably still at, let's say, $6 million when they sold it for $20 million. But when they sold it for 20 and they paid off the 6, their $4 million became 14. So what's that? 3.5x, something like that after paying the fees. Their investors did very, very well on that. And so that was a ground-up development. But it incurred construction risk. They had risks that the city or the county might not approve it. They had other risks. I know that we built a Hyatt hotel, a partner of mine, and I helped him build a Hyatt hotel. The general contractor went bankrupt in the middle and took off with $1.5 million that had already been paid him to pay out to subs. We still had to pay the subs, by the way, because we're ethical people, and that's what we did. So there's a lot of construction risk. Like I've said before, developers are some of the wealthiest and some of the poorest people on the planet. I personally would rather buy an existing facility and, hit it out of the park and come up with, about a 20% annual return. I've looked at a lot of self-storage pro formas. Again, I heard AJ Osborne on the BiggerPockets podcast this week. We're talking June or early July 2018 if you're watching the recording later. He talked about a 20% annual total return, and I hear that from a lot of people in the self-storage industry. Multifamily should have about the same return, but right now, again, it's very difficult. And again, I wrote a book on multifamily. I love multifamily, but it's not as easy as it used to be to find those. John Olnick says, do you have one of the BP Pro coupon codes for us? I'll try to get that by the end of the show, but John, if you reach out to me after the show, just go to connect with me on BiggerPockets. I'll get you a coupon to join BiggerPockets Pro. Great. Hey, Carl. So Gabriel Vargas, great question. What are the downsides? I think there's some downsides. One, they're not that hard to build. So if you pick a location, so I know an operator, it's actually the same one that built in Naples and the same one we invested with last week. They purchased an existing facility near Marietta, Georgia, which is near Atlanta, and they actually are upgrading that facility dramatically. Now, to buy another piece of raw land within a mile or two of there on the main road that they're on and compete with them would be very, very hard. But if you pick a location where the cost of land is not that high, like where I live in Central Virginia, you could have a competitor or two or three who are not as smart as you because they're not on BiggerPockets, right? Who competes with you and eventually cuts into your occupancy and into your rents and therefore your revenue. So that is definitely a risk. And I think that's probably the biggest risk in self-storage, except for what I already said, which is the risk of construction. All kinds of things can go wrong in construction, and I think anybody who's done it knows that. Another risk could be this. A Wall Street Journal article came out about 10 days ago. It says some of the millennials, millennials, by the way, the largest demographic group in U.S. history with 80 million strong, some of their renting versus home ownership preferences are changing. Well, what if we get, I've got a guy on our team who's incredibly minimalist. He throws away every piece of paper I give him, and he doesn't keep stuff stacked around. Like I have a storage room in my house stacked full of stuff. He doesn't have anything like that. What if those same millennials continue the trend of not accumulating stuff, and in the future the need for self-storage goes down? I'm just saying. I think that's another risk. So there's 3 risks of self-storage: competition, construction, and a change in future trends. By the way, did you guys hear A.J. Osborne talk about how he bought a Kmart superstore and he has $7 million invested in it? He converted it to self-storage. The competition in the area was very, very low, and he says it's worth $20 million right now. That must be where the $13 million profit came, by the way. So if you haven't heard that, A.J. Osborne's got a great episode of the BiggerPockets podcast this week. Wendy Carpenter just bought congratulations, Wendy. She just said she just bought her first self-storage facility 2 months ago. She's so excited to see more people talk about it on BiggerPockets. Wendy, I would love for you to comment a little further. If you can jump in here. By the way, Wendy's commenting on Facebook Live. You can see her comment there. Wendy, if you'd be willing to jump in and make a few more comments, would love to hear how you went about it, what type of analysis you did, and what your plans are for the future. That is truly awesome. Glad you're on the show. Alan says, adding solar for increased revenue, ROI is 60 months. So the payback is about 5 years. I've got a friend in Massachusetts who is installing solar onto commercial facilities like churches, stores, offices, and self-storage. Why Massachusetts? Why not Texas or Florida? Massachusetts, like some other states, are giving great solar credits. And so the money not necessarily made by being the most efficient form of electricity yet, but because the government's getting involved. And we know when the government gets involved, it's going to be good, right? Okay, that was a joke. So Mark, you may have already answered this. Are there any wholesales in self-storage? I think it's something that could be done. I had a guy approach me right when I was looking into this, investing in with this other company recently, and he told me about a deal, an off-market deal that he had access to. The family had inherited it, and he said they only wanted $1 million, and the cap rate looked at first glance like it would be about 10%. So going right into it, it had 100% occupancy. By the way, that's a really good sign. You should never be at 100% occupied. That tells me your rents aren't high enough. It had they hadn't done anything to the facility physically or marketing-wise in years, and it looked like a great opportunity. So he could have wholesaled that to me for maybe $100,000 profit if I would have been a buyer. I wasn't, but I think there should be an opportunity there. And like I said about 25 minutes ago, the industry is so fragmented that there are a lot more opportunities than in many other asset classes. So yes, I would think that there should be opportunities to wholesale. And if that's a business you want to get into, please let me know if you find any deals. Okay, Wendy Carpenter, thanks again. Wendy bought her first self-storage facility about 2 months ago, and she said it was a total mess. The old owners were laundering money through it when we bought it. The managers were dealing meth out of it. By the way, that's another reason for self-storage. A lot more people are running businesses out of self-storage. And so, Amazon, eBay, other businesses, meth, that was a joke. All kinds of businesses are running out of self-storage facilities right now. They can rent a unit for a couple $100 a month instead of building or renting a more expensive office space. So Wendy says there were hardly any accurate financials, so other buyers were scared away. Rents hadn't been raised in about 10 years. It was a military town, so there was lots of demand. I live and work in the town, so I was sure of the demand and the demographics. Every facility in town is 100% occupied with a waiting list. Great opportunity. So I knew I could even go past the market and get rents up. Wendy, congratulations. That is fantastic. By the way, the operator that we're investing with believes that 88 or 89% is the optimal occupancy, and that if you get above that, it's time to raise rents. It's time to do other things to increase income. So, Wendy, congratulations. That's fantastic. Rents hadn't been raised in 10 years. A.J. Osborne talked about going into a facility and not caring at all what the current income is, because his model, he's so certain after buying 12 of these facilities, what the model, that his model is right. He can generally, at least, ignore the existing income, ignore the cap rate, and he can know what he could do with it. And Wendy, it sounds like that's exactly what you did. He also said a lot of these self-storage mom and pop operators become friends with the people in the facility and they don't want to raise rents. Bing, another opportunity. Jared says, we owned a self-storage facility in my market. Storage went to 70% occupancy during the downturn. Apartments and houses went to 94%. Storage gets hammered in a downturn. Jared, so I'd love to know what type of market you were in. And I just mentioned earlier that actually self-storage did really well during the downturn. And I've got some graphs right here on my desk showing that after a quick dip, they actually did very well. So I don't know what happened in your town. Would love to know. Jared, we can maybe talk a little more on Facebook after the show here. But can you give some tips on how to know what rents should be? Well, market surveys certainly help. And actually, one way to do it is just real simple math, and that is raising the rents until your occupancy, let's say you're at 98%, raising the rents little by little until occupancy gets down to 88 or 89%, at least in this one operator's mind. And by the way, this operator is crushing it. This operator we invested with has an average hold time of 2.7 years. They're giving their investors a 2.6x return on average. Now, this is historical. They're not projecting anything like this in the future, but 2.6x return in 2.7 years. So that basically means 160% return in under 3 years. You can do the math and see what that total return is per year, but it's probably north of 40%. Now, in the future, they're projecting returns of about 20% because just like multifamily and other markets, self-storage is tightening up, and it's going to become more and more difficult as more and more companies get into this. By the way, the largest self-storage operator in America is a REIT. You probably know Public Storage. They have about 7% of the market. The next 10 competitors have 1 to 1.5% or so each, and then almost everybody else is a smaller mom and pop operation. So Wendy, thank you again. Wendy says, this was my first deal beyond one single family rental. It took me 8 months to analyze it, to find a property that she was looking for. So you didn't just fall into this. You were intentionally looking for self-storage. That's awesome. No gates, no security cameras. We got rid of the riffraff, built out 8 more units that were unused space, decreased the costs about $2,000 a month, and started generating a $1,200 to $1,500 a month in new revenue stream. So great job, Wendy. By the way, A.J. Osborne again on the podcast this week talked about you need to get rid of the wrong type of tenants, the ones who are super price sensitive, and get tenants in for the right reasons. And that's something that Brandon Turner and David Green on the podcast they commented on that. And again, you should listen to the podcast. It very interesting comments about that. Hey, John. Okay, we will try to get that BP code to you. All right. So I'm looking at some other comments here. I'll try to get to every comment if you guys can hang around after the show. We're getting toward the end. We're going to wrap up in about 10 minutes here. Wholesaling properties, raise rents, fix and flip. Okay. Great, Andy. All right. So what do you guys think of Saturday BiggerPockets Live? Is this a good day for you? What's your favorite day of the week? I think this is the first time BiggerPockets has done a live show on Saturday. And so we thought we'd give it a try. We'd love to hear your feedback. Say some other questions about financing. I did get into that a little bit earlier. So here's another opportunity. If you go to the same operator I'm talking about near Atlanta, they go in and they look for a self-storage facility that has great occupancy, great market, great everything else. And they look for extra land on that property. And this isn't really hard to figure out. Thanks, Mark. You love Saturday. Maurice says Saturday's great. Cody, the same. Go in and look for a property that has, let's say, 6 acres. They're only using 4 or 5 of it. Now that's easy value add. I mean, again, you've got some construction risk, but the company I was telling you about, they'll go in, they'll look for a property that has extra parking space, and then they go in and they might build a 3-story facility in place of that parking space. RV storage, truck storage, all that's very profitable, but a 3-story building over that parking lot is often more profitable. And again, I used the metric earlier, 20,000 or so vehicles per day. By the way, that's very market dependent. It may be 5,000 vehicles in a small town. It may be more than 20,000 in a big town. But they go in and they look for markets that are not saturated, and they'll build an additional facility on that. They've already got the marketing person in place, already got the operator in place. They've already got the showroom in place, and everything else. It's after paying for the construction. That should be an easy value add, and that's something some of you might want to try to do. Like I said, construction has its own risk. Henry, any thoughts on the North Carolina market? Charlotte, Raleigh, Durham. Thanks for joining, Henry. Actually, my partner drove Raleigh, Durham last week, and there's rumor at the time of this airing that Apple is going to be putting a huge facility there. There's rumor that Raleigh's in the very final round of running for the Amazon headquarters number 2. Even if that doesn't happen, Raleigh, Durham, that whole area is exploding. Charlotte is as well. Charlotte is one of the top few fastest growing cities in percentage in the nation. I think it would be a great market, but like everything else, make sure you're not going up against competitors who are already crushing it right in that area. Luke says yes to Saturday. Cody said, I'm looking at a self-storage facility right now. Can you run down the numbers of a deal? Actually, I don't think I have time to do that and the ability to do that on this. But if you would reach out to me offline afterwards, I'd be glad to do it. Would love to hear more about what you're doing, what market you're in, and we can talk about the numbers. All right. Cromwell Oliver Downs III, thank you for joining. You said Saturdays are great. Hey, if you haven't liked, given us a thumbs up, a heart, or a like, or a share yet, please do that. We want BiggerPockets to know if self-storage is of interest to you and is of interest to BiggerPockets members. If you haven't joined BiggerPockets Pro yet, we highly recommend that you go over and do that. You can reach out to me personally later for a code. I actually don't have one, but I will get one to you later. Hey, Daddy Matt. I work in corporate America, but would like to switch careers and get into real estate. What would be a good path to start a career change? I have no experience in real estate except for owning my own home. That's where a lot of us started. I'm trying to work on a book about 7 different paths to get into multifamily investing. And if you go back and look at, again, I'm Paul Moore. If you go back and look at some of my prior posts, last fall 2017, I wrote a post on different paths to get into multifamily. I did a video on that recently, and I did a BiggerPockets live session about 3 weeks ago about the 7 paths to get into multifamily specifically. Now, one of those paths is find a mentor. And I had gone through all types, I had meandered through all types of real estate investing since the year 2000. I'd already been a serial entrepreneur before that, but when I decided to plow into multifamily long term, I got a mentor. I spent a lot of money. There are mentors from between $5,000 and $25,000. A whole lot of them are on BiggerPockets. You can find them there. But if you want to accelerate your learning, either find a mentor, someone you can serve, and who will teach you on BiggerPockets, or find a paid coach, which is another type of mentor. And that's what I did. And I will never regret that I did it because it greatly accelerated my learning. I've actually had a mentor in 2 or 3 different businesses in my life, and it was fantastic. Henry says, which website has self-storage for sale so I can start looking and analyze? Henry, I don't have an answer for that. There may be websites that I'm not aware of. I would say LoopNet is an opportunity. A lot of people are really down on LoopNet, and honestly, I don't spend any time there myself. But there are real estate specialists, commercial brokers, like large commercial brokers like Marcus and Millichap, etc., that have specialists who just sell self-storage for a given region like Southeast U.S. And in fact, I met one in Atlanta when I was there recently. David Murphy says, how can you find out what current facilities in the market are doing? How would I be able to know the analytics that you have been stating? Well, you can do a lot of calling around, and you can piece together a lot just by doing a competitive analysis. You can call around, you can drive around, but you can't get all the information from that. There are services out there that analyze this type of data, and they can spit out those type of metrics. You can actually get I won't name any right now because I'm not endorsing any, but I'm thinking of 2 or 3 different types of services out there who will analyze the market. They will tell you exactly who the competitors are, and they'll give you their best guess on what they're charging, what their total square feet are, etc. And so Jared says, have you used automated systems such as the kiosk for running storage? When I first decided I wanted to invest in self-storage, I thought that was a no-brainer. Yeah, let's beat the competition by having no employees and having a kiosk and all that. But the more I learned, I actually realized it was, that's a strategy that certainly probably works. But the strategy I like better is the strategy of having 2 full-time employees in let's say a 40 to 100,000 square foot facility. One that lives on site, by the way, and then the other one that does a whole lot of marketing, operations, great maintenance people in the market. It's more of a people-dependent business than one might think to run it in the way that I'm personally investing in. So no, have not used the kiosk model. I am sure that's a profitable market as well, a model as well. Wendy says, I found mine on Residential Agents regular MLS under business and commercial. Wow, thanks, Wendy. So I wouldn't have thought of that, but I am a real estate agent, by the way, and I would never have thought to go on my local MLS to look for a property, but it seems like that's exactly how Wendy did it. In fact, I'm going to go look for one later and see if there's one in our market. That just gets me thinking. So, but I would check LoopNet. I mean, crazy that you might want to check even Craigslist. I don't know. But AJ Osborne on the show this week said that he only buys off-market deals. He doesn't buy anything that is marketed. He doesn't care what the broker says it's worth. and doesn't even care what the for sale price is. He doesn't care what other offers are coming in at. Sometimes his offer is much higher than others because he says he realizes the value. I mean, take that Kmart, the super Kmart he bought, and he converted it from a $7 million capital. He converted $7 million into a $20 million value. So we're really glad you're enjoying this show. Please share this live video with friends so they can watch it too. Please connect with me on BiggerPockets if you have further questions. I'm going to try to hang around for a minute and see if there's other questions I need to answer. We're trying this on, we have BiggerPockets Live, we have YouTube Live, and Facebook Live all running simultaneously. And so I'm looking at 3 panels for questions here. But it is the top of the hour. It's 11 a.m. in California, 2 o'clock on the East Coast. So I am going to wrap up. And I'm going to answer, I see a handful of additional questions I missed before, and I'm going to try to answer those. But we're going to wrap up today. Again, I'm Paul Moore, and this is BiggerPockets. Go to BiggerPockets Pro if you haven't subscribed to that yet. It's the best investment I have ever made in my life, and I've told lots and lots of people that. I got an engineering degree. I got an MBA. I bought a lot of things over the years. It's the best investment I've ever made. So thanks again. Thanks again for joining us on a Saturday. Reach out to me, Paul Moore, if you like, and we'll see you here next time at BiggerPockets Live. All right.